now we have seen financial markets, assets, and institutions, which are components of the financial system. Now we need to look at one of the components, the remaining component of financial system, which is financial regulation. In order to tell there is a regulation, or to say there is a regulation, there should be a regulatory body who controls and regulates the financial system. Also, there are different financial market participants in the financial system who are regulated. So let's look at who are the financial market participants. This could be a pure investors or speculators. But do you know the difference between investment and speculation? Just to make you understand the concept deeper, let me look at the difference between investment, speculation, as well as gambling. These three terms has something in common because all three of them looks like spending your money in order to get some return. It looks like that way. However, there is a difference between investment, speculation, as well as gambling. So what is the difference? If it is an investment, it is done by expecting most of the time a long-term return. If you are an investor, you require a long-term investment return. However, speculators are the one who bought anything. It may not only be a financial asset. However, they bought anything when the price drops and sell it again when the price raises. So they are benefited from the price fluctuation. Speculators or speculation is buying something when the price drops and selling it again when the price rises in order to be benefited from this price fluctuation, and the difference will be the return. However, gambling is the shortest return provider. If you get a return from gambling, you will know in the result immediately. So if you invest, probably you might need several years in order to know how much your return is. For speculation, it's a bit shorter. However, in gambling, you might immediately know whether you get it or not. For example, a lottery ticket. The other difference is in investment, the return is usually in different ways because you have different opportunities of investments. However, for speculation, the return is in the form of price fluctuation. But in investment, there are different investment avenues. There are different investment opportunities. So in different way, you can get a return, not only in the price fluctuation like in the speculation. Hence, investment is long term, and people most of the time get in investment by making detailed analysis, so that investment is a little bit less risky than speculation. However, in speculation, you have a shorter time. You might buy some commodity or asset when the price drops. However, if the price doesn't raise up again, even you might not be benefited at all. Also, there's a probability that this price might drop further. So speculation is more risky. We know that gambling is the riskiest one compared with these two. Investment considers the fundamental factors. Fundamental factors means there are two different analyses. I will not get deep into it, just to tell you that this one requires more time than this. So when you make a technical analysis, what you analyze or study is that you look at the trend. For example, if you want to buy the one company's share, what you have to do as a technical analyst is to look at the past share price history of the company. So in the past, if the company has a good history about its price increment, so you will look at this trend and you probably estimate the company's share price will continue to grow for the future years also, and you will consider the company as a growing company. You will not make any additional further deep analysis like this fundamental analysis one. Just you look at the price history and predict the future price. If you found the company will grow, you will buy the share based on the prediction you made from the past data of the share price. However, in fundamental analysis, you have two options to make EIC analyze the industry, the economy or the macroeconomy of the country which the company is in, the industry which the company is working in, and looking at different factors of the company other than the share price history. For example, when you analyze the economy of the country which this company is working in order to choose it from other companies that are operating in abroad as an international level, you look at these different